Hey, and welcome back to a new update for the investment portfolio. Everyone who wants to invest in stocks or ETFs, it's a new month again. May is coming. Good weather too. We can enjoy it, and stocks are starting to rise again, despite all the uncertainties. My portfolio is still outperforming simply because I had relatively a lot of cash before the crash started. If you follow us more often, you know that we have already positioned ourselves and sold many stocks from America, predominantly investing in Europe and a bit in Chinese ETFs. And I simply continue to stick to this strategy. The only thing that is changing is that after the recent crash of about 20% of, for example, the S&P 500, I have started to buy a bit more, but not fully yet. Where I previously had a cash position of about 50% or even a bit more, it is now only 40%. So quite a significant amount invested, but certainly not all in. I am not yet completely convinced about the entire development, especially on with Mr. Trump. And yes, how is that going to turn out with tariffs and such? And as far as I know, tariffs are still active. And as long as that continues to happen, day after day, companies will be heavily affected by it. Do not underestimate that. But it is not a time to be fearful now, rather more optimistic. The prices have dropped. There is a bit more calm. Prices have fallen, so we can buy more at better valuations. It's just that I personally simply don't think I'll go in 100% right now, because it may well be that more exciting developments occur. But yes, no one knows for sure. In this portfolio update, a brief look at the latest transactions from the past month and a small preview of future valuations. Do you have questions? Let us know. Check our website or the YouTube description for interesting links to free downloads, watch booklets, calculation tools, and also discounts on certain programs. Win-win. We benefit from it, but so do you, so see what you can do with it. Let's take a look at the portfolio update. First, a quick overview of the different accounts. There are a few more now, and if you've been following us, you know why. What I haven't shown yet is also my joint portfolio. I want to mention that I've kept a lot of cash on hand, and I haven't actually shared my other portfolio yet. So what we see here is the DEGIRO account that I have actually shared with you more often. But a second DEGIRO account is from our joint portfolio, and I have recently added more funding to it and bought some ETFs, which I will share with you in a moment, which ones they are. Next, the MEXEM portfolio. Here you see the cash influx that has been made. That is related to a part where everything was initially on DEGIRO, and I sold a significant portion. I sold everything in dollars and put it on MEXEM. From our company, we have also started a long-term collaboration with MEXEM. I have spoken to the guys. Well, they are relatively smaller. Happy investors, we are also just a small growing company, so there is naturally an immediate personal connection. They are credible and reliable. Absolutely fine, and they have much better service than DEGIRO. But for me, there is really only one thing that is most important, and that is cost savings. Because the dollar currency conversion cost at MEXEM are significantly lower than at DEGIRO. And really, that saves a lot of money. But I have explained that in other videos, and DEGIRO is still a fine platform, but mainly for euro purchases. However, we see that I still haven't done anything with my cash position at MEXEM, so we won't be discussing it shortly because, well, nothing has changed. I had a small position for a while in the BlackRock Science and Tech, a sort of Invesco QQQ, but with a different strategy and higher dividend. And yes, the recent cash has been deposited. Well, you see, 90,000, but only 2,400 is invested, and the rest is still just cash. So I'm just waiting. I'm not yet convinced about the American market. I do see some nice opportunities emerging here and there, and maybe I'll be punished for my passive behavior. We'll see. Only very important, a short side note is that I will be investing in smaller Dutch companies, local businesses in the future, because then with our power, with a team of operational and strategic people, we can help companies grow, and you have much more control and impact on your return. So if the stock market continues to rise happily, that's perfectly fine. Look at my return. I just don't look at returns on cash. I only keep that cash on hand in case I can invest in other types of investments. So it's not like I'm timing the market here. I'm just patiently waiting, and I don't have to do anything. I don't have to take risks if I don't want to. And I hope the same applies to you. Then we also have the business portfolio that I initially had with Interactive Brokers, which works the same way as MEXEM. It's the same platform, but I have also transferred it to MEXEM. And this is my business portfolio. Here too, we see that about 51% is still in cash. We receive interest on that. And we have 33% in equities or stocks and a portion of 15% in real estate funds. What I find interesting to show is that I set the time period to February 29th. That is actually the highest point of the S&P 500. And from February 19 up to today, the S&P 500 is at 10.7%. However, my portfolio is only at 4%. So I have been less affected. This also has to do with some unusual positions I might have that are not understandable to everyone. But my real estate funds are doing relatively okay. And I have slightly bought more shares after the significant crash of the recent period. The same goes for DEGIRO. So essentially, every time there is a drop, you buy more, and in the long term, you create more returns. But yes, every once in a while, a crash just happens, and then part of your returns disappear. It takes another year before you're back in the green, and that's the game. Keep pushing for the long term because you need to make the game work for you. I'm still not entirely convinced. There has been a crash, and now there's a quick recovery. I gain a lot based on fun, music, but I still think there's a real chance of a recession. I don't think that's factored into the prices. But who am I? Mr. Market probably knows better. We'll see. The only thing I look at is the S&P 500. The price to earnings ratio is, for example, very high. And also the Invesco QQQ, which I really want and have already taken a small position in within my other portfolio. Yes, I'm not convinced that now is the right timing to invest, even though certain stocks do look very interesting. We'll see. As I said, I don't need anything. I remain patiently waiting because there are so many opportunities, and the only thing I need to do now is to avoid making any big mistakes. And that simply means handling my money carefully with a lot of discipline. And I hope that certain insights can help you because we are here for you, your hour's journey, and hopefully to improve your returns. Even if it's just with one insight, then I'm already happy. Well, we're now going to look at the various transactions from the past period. We're going to look at the different transactions from the past month as you're used to in our monthly update. If you want to stay up to date with all the monthly portfolio reviews, then subscribe to our channel and follow us, and you'll automatically receive a notification. And that's also nice. It helps our channel grow, for which we thank you. We start with the transactions for stocks, and in part 2, we end with the short transaction of the ETFs or exchange traded funds. If you want to see that right away, you can click through in the video regarding stocks. Hey, the story is actually very simple. I've just been buying a bit here and there lately. Some stocks have, of course, all been heavily affected by the crash. I mean, my positions have also been affected. That's logical. And others are fortunately recovering. And because I was able to buy more at lower prices, they are starting to recover extra as the market begins to rebound more significantly. Today is a relatively goody day, and some have indeed dropped significantly in the past period, such as SDipTech, a serial acquirer in Europe, and for example, Technion. And soon a bit more from ETFs. Let's move on to transactions. For the past month, seems like a lot has been sold, but I shared this in the April portfolio review. Everything I sold here are dollar accounts. Actually, the only one I regret is Cecil. It's really a very interesting, good stock. Volatile, yes, but it has faced significant challenges. Take a look at it. I think you will appreciate looking into that company. Still, I haven't bought a new position. Now, I'm taking it easy regarding dollar purchases in the MEXEM account, and I've already explained why earlier. So actually from that story, but we started mainly open from April 3rd. We only see one sell here, but that's an administrative action by advice group. It was a bad investment, and unfortunately, they issued a lot of extra shares. For me, that was the reason to just completely stop. Take the loss, don't look back. Fine. Other serial acquirers, more confidence in them, especially for the long term, and just bought a lot more on declines. So that's about SDH. and that's about VTech Software. Twice on April 10th, but also on April 23rd, it dropped a bit. VTech Software is a serial acquirer, also coincidentally in Scandinavia, and for the well-known software companies, just like Topicus does, but it does it for larger companies. And Constellation Software is, of course, the most well-known. So we actually only see buying. We bought a piece in green landscaping, and actually all small amounts still, but we did make some bigger purchases. Technion, I'm still very enthusiastic about that. Very small, not company, serial acquirer by two Basel enthusiasts, and they simply buy up technical companies. I've said it. It's already very interesting now. Around this level, I've also shared more often, and that dynamic management is super important in this story. Why the management has indicated, listen, we have acquired, might eat 3 to 4 companies per year, but we expect to be at the upper end of 10 for the coming period, so between 7 and 8 acquisitions per year. They have managed to secure a new line of credit for this, and indeed they have kept their word right after saying it and made many acquisitions. A lot, actually, in a short period of time. All interesting small niche companies, so they are learning well from the mistakes they made in the past. Yes, just super interesting. Very happy with it. For many, it might be a very risky position, but I have a substantial amount invested in it. I believe in it, and I actually need my investment to become financially independent. And I hope that Technion is it, but we keep hoping. Because yes, you never have a guarantee for the long term. You never know for sure. So we'll see. And don't listen too much to me either. I have a bias for this company. I just think it's a great company. We see some ETFs being purchased, more on that later. In depth, I had still doubted whether to buy more Evolution, but I already had such a substantial position in Evolution, totaling about 30,000. Well, converted, that's a little less than 10%. I believe 8%. And I want to go up to a maximum of 10% per share. But I was still hesitant about buying more. Too bad for me, because around the price level of $67 or something like that, the new annual figures of Evolution were presented, and poof, the price shot up again. Great company. And I continue to hold on. I keep persisting. This is truly a long-term compound. There are risks. Of course, that always remains. But as far as I'm concerned, the valuation is just right. Doing well enough and for long-term compounding, so in the end, I didn't buy more, but the result has climbed back up after the significant short-term price increase, and meat still at 11%. Soon a dividend of about 4% is coming, so the result will be slightly better. Yes, just a little more patience. The rest is not really much special. Actually, a lot of negatives. The only one doing super poorly is Zeta, Global Holdings. I expected more from it, but yes, that's the game with riskier growth stocks, and for me, it's simply just waiting. Bought a bit more here and there, but I'm not going to buy more. Why would you think? Because you buy more if you really believe in it. Yes, that's correct, but you also have risk management. Moreover, you can be wrong, Phil. And if you keep buying into a loss that you only realize later, then you end up losing everything. So you shouldn't do too much. So we just remain patient and wait. Additionally, teleperformance, take a look at it. A little tip from me. I find this very interesting in terms of return potential. Then the stock update of my maximum business portfolio, already mentioned. At the beginning of the video that the performance is already better or significantly better than the S&P 500. Minus 4% instead of 10% is a 6% outperformance. But part of that is simply due to the cash position I have, so still a lot of cash. It has shrunk a bit compared to the last update because, yes, I've bought a little here and there. Last month, Stoneco and PagSeguro, two Brazilian companies, have mainly increased. I still think they are very cheap for what they do. Interesting enough to delve into, even at this current price level. I also bought a little more of FitLife Brands, a very small company. In my opinion, it's doing well. I think it's interesting enough to hold on to for the long term. Yes, and I have some smaller positions in this case in Carnival Corporation and Starbuck Carrier. That is Belk. Apologies. And if we look at the holdings, Starbuck Carrier is one of the shipping stocks. and I've just created a sort of mini ETF of shipping stocks. And unfortunately, they keep letting me down a bit, but they also pay out high dividends. And the thesis is long term. I've emphasized this more often. Far too few ships are being made. If exports increase, there will be a supply chain squeeze. But what has changed, of course, are all these tariffs that will definitely have an impact. So I'm curious to see what will happen in the short term with these shipping stocks. Hopefully they won't be hit too hard. That wouldn't be good. They could also go bankrupt, given the debt positions. And of course, I hope they continue to pay out high dividends. So yes, that's the game. We'll see. We didn't perform well on monthly results. But yes, this is basically everything you see per month. Additionally, a portion of real estate funds also slightly decreased last month, just like, of course, the entire market. Visi Properties remains the largest holding within the real estate funds of my portfolio, and I haven't bought or sold anything here. Just stable, no noteworthy updates. Additionally, I mentioned that I bought a bit more of Kelly Partner Group. I'll show the other two that I bought shortly. Yes, the total market value has now increased for this small company from Australia. It actually acquires a lot of accountancy firms, also a serial acquirer. I find it very interesting. Currently still at a plus 19% despite the recent drop. And I had bought some more. That's listed below. This was first purchased in the summer of 2024 at a price of 8.44, and it had slightly dropped to a price level of 11.3. That's somewhere on the screen here. And then I bought some more. I actually wanted to buy even more, but unfortunately, I didn't. I had set it at 8.5. Unfortunately, my purchase order was not activated, and this is just very simple. You can see that the return since the purchase a year ago has just evaporated a year later. And this happens so often. So if it happens to you, just get used to it. It's not really your fault. It's just how it goes. Returns take a lot of time to build up, and then they can just disappear in a short time. What you mainly need to do is stay calm and keep buying more. And if you keep doing that long enough with your winners, you'll just achieve increasingly higher returns. That's how simple the game actually works. Besides Kelly Partners Group, I also bought a little more with live brands. Just do it to show it, then we see Fit Live brands. And here we see the transaction history on April 9th, 2025. Bought a little more, but for $1,000. And I also created a buy order, but those were not activated either. Then also bought a little more of Giga Cloud technology as a new position. And that is March 2025. Bought at a slightly higher price compared to now. And I bought a little more on April 15th. As you can see, somewhere around this price level, 12.13. Yes. And as a result, the average purchase price has slightly decreased. It has then decreased to 14.7. That means this line here, so my total return is 7.6% in a nutshell. What GigaCloud technology does. This is a somewhat dubious company, but I have seen many stock analyses now that have taken photos and are independent, and the warehouses are filled. What they do is they have actually created a kind of warehouse in America, but also in Europe. And they purchase goods from China themselves, which they then sell through third-party sellers. So if you have a company, Yeti, and you want to start drop shipping, let's say furniture, you can sign up with Giga Cloud technology, and then you can purchase through them and have it delivered to the customer. And yes, yeah, stock is currently very cheap. It seems dirt cheap, but of course there is some uncertainty with all those tariffs with China. That will not have a good impact on Giga Cloud technology, but if we simply look at the valuation, the price earnings ratio is currently 4.4. You almost never see that. For next year, it's 5.3. The PEG ratio is actually not even known. All the ratios we see below here are very cheap, 3.4 cash flow. They do have some debts, but mainly long-term debts, and a bit of leasing. And they also have quite a bit of cash. So the net debt is a point of attention. But the growth figures seem healthy, and this company has grown very quickly in the recent period. It is now also active in Europe, which it wasn't before. You still create quite healthy margins. Make strategic acquisitions here and there. Yes, the management is entirely Chinese and has been mentioned in some award. No idea. I just took a small position. Market value is 4,000. Yes, what is it? 2% in this portfolio. So 1% in the total portfolio doesn't represent much. But these are the types of small companies that could potentially go tenfold or even 100-fold over a very long term. If you're lucky, and if you're not, well, who cares? You lose a bit of money, and then one of the 10 you've selected will perform well, and you'll make up for all the losses. Simple strategy I use. I invest in small, risky, good stocks for the long term. That long term, I sometimes have to hold on a bit longer, here and there, especially to avoid selling my winners too early. A mistake I make regularly, and for that I use stop loss orders, which I also frequently share in updates like these. Finally, let's take a look at the ETF portfolio update. Now, a short update on the ETFs. I've bought recently, and last month, I purchased significantly more ETFs than stocks. Those were somewhat smaller volumes. With ETFs, I bought in larger volumes. Two ETF portfolios to share with you. The joint one and the one that's mine. With joint meaning with my girlfriend. And yes, actually not much has changed, but just bought a little more. The China Internet ETF is something I've emphasized and mentioned a lot recently. Actually, for the last 6 months or so. And for me, it's still just interesting. For example, Alibaba is one of the top 3 holdings within the ETF. And there are about 25 to 30 Chinese Internet ETF stocks in that ETF. And Baba, if you look at the valuation price or earnings for next year at 15.5 and the PEG ratio below 1, try finding that in the American market for such great companies. Very difficult. But you want to say something about it. But ultimately, yeah, valuation is important, and it's best to buy good stocks cheaply. Good companies are, of course, companies with long-term profit growth. But to invest only in Alibaba or Tencent, I won't do that. I simply buy this Internet ETF, and with that, I achieve diversification. Nice and simple investing. Yes, actually, that residual strength can also be spent on other things. And finally, I bought more of the uranium miners ETF, a very risky ETF, also volatile. So, with high, strong price fluctuations, I shared the first part of the last portfolio update. I bought uranium key, and then it was at 17%. After a further price drop, I thought I had bought at a good price. That was somewhere around this price level, but then you see it still drops a bit further. I don't know exactly which price level, but yes, this could be somewhat accurate. So it had actually dropped by 18% in about 2 weeks' time. And now it's starting to rise significantly again. But more importantly, I also bought again somewhere on this dip. And as a result, you see that the effect becomes a bit better. So it's now about 3%, but I think for the longer term that it has more upward potential than downward potential. Of course, that's the reason you buy. So here we see the latest transactions. I need to take a good look. A bit of Quina shares and also a bit of the uranium miners ETF bought here on April 9th. And on April 10th, a small amount of China Internet ETF was bought. And also on April 14th, a slightly larger position was bought in uranium miners. And this price was then 6.3. So then the current price is 6.8. So yes, you can slightly lower your average purchase price and thus achieve a higher return. Simply put, buy the dip. It's really that simple. Well, in the joint portfolio, quite a bit of cash was deposited. So cash was deposited on April 23rd. My girlfriend is already a bit anxious about investing. Even though I've been doing it for 10 years, she still has a lot of doubts. Is this going well? I have sworn. that I will only invest in ETFs. You still see some stocks here, but these are all from a long time ago. Beyond Meat was something my girlfriend bought once. Yes, let's hope it survives. But that's beside the point. C3AI was my purchase, and it has also performed terribly. I definitely shouldn't put my girlfriend in a bad light here. As for investing, others are doing somewhat better. Patio Bureau and Stoneco, very cheap in my opinion for the long term, but performing a bit worse in the short term. ASMI International, I don't know, bought a few years ago. Escalera, the same. We basically don't do anything with them anymore. They just stay as they are. We mainly buy ETFs. This is a bit of a mix because we transferred my girlfriend's account to the DEGIRO and it has sort of been integrated. As a result, we actually have two versions of, for example, the Invesco QQQ, but the one I bought additionally is with the ticker EQQB. And why? Because it says ACC on the screen behind it, and that means accumulation. In other words, it doesn't pay out dividends, but reinvests the dividends. And I prefer that. If it says DIST behind it, like here, it stands for distribution, and then it pays out dividends. Well, the dividend is not high at all with this fund, but I just want it to be automatically reinvested. At brokers like Interactive Brokers or Maxima or other brokers, you can simply automatically reinvest the dividend. But with DEGIRO, that's not possible, so I find that, well, not nice. So that's why I just buy the ETF version that is cumulative from the past month. So added some money, but as we see, the free capital is still 55,000 euros in cash. So here again is the common thread. I still have a lot of cash. I'm not going all in yet, but no one has perfect market timing, and certainly not me. So I just buy here and there when the price has dropped a bit. Well, that Invesco EQQ, in this case, I have wanted to have in my personal portfolio for a very long time. I haven't bought it yet, but I have here already. I'm just gradually building up positions. Also the Quaisner Shares Internet ETF. And that's basically it. Simple, practical, high risk, because the ETF and uranium miners are very volatile. I also don't know exactly what it will do, but I'm very curious about it. The Quaisner Shares China Internet ETF, yes, is also focused on about 25 to 30 Chinese internet companies. It also has to do with China, but I think they will actually benefit more from this whole tariff story than Trump. But that's just an aside. And then we also see the Invesco EQQQ. Also all primarily focused on technology, innovation, somewhat comparable to the NASDAQ 100. All, riskier, more volatile ETFs with more fluctuations in the short term. And that's very nice because if they correct a lot here and there, you can keep buying more. And this portfolio will eventually go 100% into ETFs. In my personal portfolio, I also want to invest more in ETFs, but I mainly do that with a cash position at Maxim and my business portfolio at Maxim. So in the long term, the ratio will shift from initially a lot of stocks to now 40% stocks and 60% ETFs. But this is a long-term journey. It might take me another 2 or 3 years before I've invested my entire cash position. Time will tell. The only thing I know for sure is that I will increasingly invest in ETFs. And that also has to do with my own time investment. I have analyzed a lot of stocks, and I still do, but I'm going to establish a holding company and then actively invest more in, well, small local businesses and help them scale up, mainly from a strategic perspective. By the way, do you have a small business? Are you looking for growth capital? Are you open to a long-term acquisition, growth, a win-win, where you also benefit? Just let me know. But that's just a side note. This about ETFs, also about the stocks. Do you have questions? Just let me know. Thank you for watching and enjoy the nice weather. That's the most important thing.